On Small Cap Power, we're with Aaron Dunn, a senior analyst at KeyStone Financial. Aaron, thank you for joining us on Small Cap Power.
Thank you for having me.
So last time we spoke, we had stock picks, we had some background on the company, but we didn't talk about you. Let's talk about your background and what you bring to KeyStone Financial.
Okay, so I've been doing this for 10 years, over 10 years, researching stocks for my clients. I'm a CFA charter holder as well, Chartered Financial Analyst. And I'm absolutely passionate about doing investment research. So I'm an investor myself, but I'm passionate about helping individual people achieve their financial goals. And what I really want to do is I want to help individual people avoid risk, avoid unnecessary risk, because it's unfortunate that in the market today, there's too many investors that are trying to achieve their financial goals, but they're going after the wrong types of stocks. And just with a few really easy adjustments in their investment strategy, they can really avoid about 80% of the risk that they encounter.
Well, you're here in Toronto because you're here for a do-it-yourself seminar by KeyStone Financial. So what is the biggest takeaway that investors could have today?
Well, one of the things that we're going to talk about at the start of the seminar is separating speculation from investment. So there's two types of business models, the way that we look at it. There's the speculative model and there's the investment model. And what we're telling the people here at the seminar, if you want to set yourself up for success in investing, you want to put your money with companies that operate under the investment model. And what that means is these are companies that have real value-added products and services. They're generating real revenues and real cash flow, and then they're reinvesting a portion of that or all of that cash flow back into the business to achieve per share earnings growth for the shareholders. And that is what's going to drive share price performance over time. The speculative model, which we always tell people to avoid, these are the types of companies where they don't actually have a product or service, they have an idea. They want to build something, but they're not generating any revenue or they're not generating any profit. So there is no proof in the commercial viability of whatever it is they're trying to do. And what this type of company does is they spend money. They don't earn it, they spend it. And when they run out of money, they have to go back to the market, they have to sell more shares for more investors, and that essentially dilutes the ownership interest of their existing shareholders. So we are very adamant. We are telling our clients and any other investors that we're speaking to that if they want to set themselves up for success, they have to avoid the speculative model and they have to put their money with companies that are operating under the investment model.
Okay, so yeah, for us, is there a stock pick that you have that would obviously be under the investment model?
Yes, yeah. So one of the companies that we're going to talk about today is Algonquin Power and Utilities. The symbol is AQN. And one of the things, it really exemplifies a lot of what we do at KeyStone. So this is actually, at its heart, a very boring business. It does renewable power generation and also regulated utilities. So very strong cash flow, but not a lot of volatility in the cash flow. So if the economy does well, they're not going to make a lot more, but if the economy does poorly, they're not going to make much less. So in that respect, it's a boring business. But what makes it exciting is they've taken this business and they've turned it into a growth stock. So over the past 5 years, they had a 5-year growth plan where they invested a significant capital into the company. They did a number of acquisitions, and what they were able to achieve from this is double-digit growth in cash flow per share and also double-digit growth in dividends. So right now, when we're looking forward, they just did the largest acquisition in their history, $2.4 billion, and they just commenced their new 5-year growth plan. So over the next 5 years, they believe that they can grow their earnings per share at 16 to 18%. They want to continue to grow the dividend at about 10% per year, and we consider that exciting.
Right, for sure. And now investors are always looking for new ideas. Do you have an industry or specific idea that you can suggest for our investor audience?
Well, rather than just looking at a particular industry, we just really like to look at the model that the business operates under. So we're fairly industry agnostic, but what we're looking for is a company that is producing strong cash flow, is able to reinvest in the business to grow that cash flow over time, and in a lot of cases pay a very attractive dividend. And there's a lot of different industries that we look at that are able to do that. Some very interesting opportunities in energy infrastructure, which is where Algonquin would fall. But also in other areas that you wouldn't expect, like technology and healthcare. So we're fairly open-minded with respect to the industry, but the model is what is important to us.
Right. Now, are you reachable for any investor that wants to talk to you?
Absolutely. I love talking to investors. I say that all the time, my clients, but also just somebody who's interested in what we do. I'm always open to speaking with people either by email or over the phone.
All right, so we'll definitely share that. Thank you so much, Aaron.
Great. Thank you very much.
To learn more about KeyStone Financial, you can go to keystocks.com. I'm Rachel Lee for Small Cap Power.